A retired couple came to me recently worried that rising inflation might undo everything they've been building, and they weren't alone. A lot of people right now are asking that very same question. Will higher inflation hurt my portfolio? And frankly, it's a smart question, but the real answer is not what most people expect. Hi, I'm Jordan Lehman, founder and financial planner at True Wealth Retirement Partners. And every day I help my clients create steady retirement income, invest smart, pay less in taxes. I want to share that with you guys. So, in this video, let's break down what history actually shows and what it really means for your retirement plan. So, inflation is one of those financial buzzwords that suddenly becomes very real when you're retired or planning to be. You've maybe asked yourself, is inflation about to erode everything you spent the last 30 or 40 years working for? And it's not just a casual worry, it's a real gut level fear for a lot of folks. You see prices climbing on groceries, healthcare, utilities, and you can't help but wonder, are my investments even keeping up? Now, most people assume inflation and the stock market have a pretty simple relationship. When inflation rises, stocks fall. And it sounds logical, right? Higher costs, tighter consumer budgets, higher interest rates. It feels like a recipe for poor performance. But what if that logic doesn't actually hold up? And what if the real relationship between inflation and your portfolio is a little more complicated and maybe even a whole lot less scary? So let's take a look at the numbers. If we zoom out over the last 3 decades, this is from 1995 through 2024, there's actually really no reliable connection that I can infer between inflation and stock returns. And while that might sound surprising, I believe it's true. Now, some years like 2021, inflation was climbing and the market still posted strong gains. But other years, like in 2022, both inflation and returns looked ugly. But across those 30 years, 23 of them delivered positive returns, even after adjusting for inflation, which means most of the time stocks didn't just keep up, they outpaced rising prices. And while that's a comforting thought, we don't want to stop there. But by the way, we'll peek at the data in just a second. Because if you're already retired or about to be, you might be thinking, sure, long term averages are nice, but what about my timeline? And that's a great point. When you're withdrawing from your portfolio to fund your lifestyle, it's not just about long term growth, it's also about what? Some stability. And that's where inflation feels even more dangerous. You're not just worried about stock performance, you're worried about a sequence of return risk. The scary idea that poor returns early in retirement could permanently damage your nest egg. But let's jump in and take a look at this. So, this is the resource that I was referencing. Even with the concern we just outlined, there is good news. Over this 30-year period, and this is a resource here from my friends over at Dimensional Fund Advisor looking at inflation and stock returns. Again, 95 through 2024, the S&P 500 delivered an average real return of 8.2% after adjusting for inflation. We see the red dot here in this graph is what the inflation rate was for that year. And then we see in the teal bar the S&P 500 real return net of inflation. So while short-term bumps are always a concern, the long-term track record is actually on your side. Stocks have historically beaten inflation, not just kept pace, which is why staying invested even during inflationary periods can be so powerful. Not recklessly, but strategically, with the right amount of growth, income, and risk protection. And by the way, speaking of history, let's rewind a little bit back to the 1970s and 1980s. This was the last time that inflation truly took over the headlines. Think double digit inflation, gas lines, interest rates. You wouldn't believe it. At least that's what I'm told by my clients. I wasn't around for this period, but I'm told it was an economic mess. And yes, stocks took a hit in the early part of that decade. But here's what many people forget: by the mid 1980s, markets had adapted. Looking back, significant returns, frankly, over that period. Companies found ways to grow. Inflation eventually cooled, and investors who stayed the course, despite the fear, came out ahead. So, what does this all mean for you? It means inflation isn't the portfolio killer it's often made out to be. The real risk isn't inflation itself, it's letting fear drive your decisions. Because history shows that markets are resilient, and smart planning, not panic, is how you protect your retirement. So, if you're wondering whether your retirement plan is built to weather inflation, go ahead, check out the link below. You can schedule a call with me, kick off our free retirement assessment process, and I'll help you get a clearer picture of how prepared you really are. So, thanks so much for watching. And just remember, history doesn't repeat itself exactly, but it does tend to rhyme. So, let's learn from it, not fear it.